That was the big unlock. That's the new revelation. It has increased the cost of capital. We'll talk about that later. But the whole idea is borrowing from the future, buying Bitcoin today without getting liquidated. And Strategy is the primary leader in that business model.
How do you think about, because this is something I still struggle with the long-term vision of Strategy. Where do you think it ends up being in a Bitcoin ecosystem? Let's say Bitcoin is not a $2 trillion asset, but $100 trillion, $200 trillion, $300 trillion asset, which would mean it's Bitcoin is basically the biggest asset in the world and has the kind of like a central gravity effect on all of the financial institutions, and most of it is based on Bitcoin or built on top of Bitcoin. What kind of role does Strategy could play in that world where they might have 1 million, 2 million, or beyond that many Bitcoin, almost like a central bank or like a country almost with so many Bitcoin, if everything is built on Bitcoin?
Yeah, I think that's a really good question. And it plays this idea of like, what is the unit of account in such a world? And does debt exist in the fiat, says in the fractional reserve banking system sense? And I can't answer those questions, but I do know for the next 10 years that I expect fiat to continue to exist. I expect it to continue to be debased and at actually a faster and faster rate. Plus, I believe debt to still be the primary method of fiat creation, right? We live in a debt-based monetary system. So the way money is created is via debt issued by banks, essentially. And in this model, the most rational sort of action by a player like Strategy or someone who has a long-term bullish view on Bitcoin is to borrow in the deflating, depreciating currency to buy the scarce hard asset. So then how do you set that up? And I think for the next 10 years, the preferred equity model is the strongest, most robust model by which they can do this. And, then the question becomes, how much leverage do you take on as a company like Strategy? We can get into that later. But I think out 10 years, I think in 10 years, fiat will still exist. I think Bitcoin will be materially higher. And I think the value of $1 today in 10 years will be about 40% of what it is today. So if you believe all those things to be true, then the business of borrowing from the future in terms of future cash flows to buy Bitcoin today, doing so in a responsible fashion is a fantastic business model and will work until we're starting to get kind of on a Bitcoin standard, which will take a lot of time.
And I think there's also an important difference there between leverage and amplification. And if you just look at the pure debt they have with the convertible notes and all of those things, they have very little debt. And I think people would be surprised to see that. I was surprised to see that, actually. I thought they have more debt. Also, especially when you compare it to other companies in, for example, the S&P 500, there's like almost every company has more debt than Strategy. And the preferred equities are capital and not debt, even though they have a dividend obligation. How do you look at the move they are making to have less debt? I think they want to be debt-free by like 2029. I think I heard that on a conference call or earnings call at some point on a Strategy earnings call, and have kind of the preferred equity. It's their main driver of how they accumulate Bitcoin.
Yeah, absolutely. I mean, you significantly de-risk a balance sheet when you don't have a period of time during which the debt has to be paid back, right? So like, obviously with all the convertible notes, there are periods of time during which they come due, right? There is a term to these convertible notes. Therefore, if Bitcoin, if they're not in the money, if they can't convert into equity, if they're out of the money, Strategy will have to either cough up the money to pay back the convertible notes, convertible note holders. That's a traditional just debt obligation. Or they'll have to, refinance the debt and take a longer term time horizon, rolling that debt forward. So there's risk there. And, ultimately what happens in bankruptcy for most, traditional corporations is that the debt burden becomes too heavy, and ultimately the actual equity loses all its value, whereas the debtors now have a claim on the underlying assets that is superior to those who are holding the common equity. Okay, so they're de-risking this threat And the threat kind of is a result of Bitcoin's volatility. If Bitcoin was not volatile, if it just went up 10% every year, 20% every year, then the debt wouldn't really be a problem, because you would know when it would convert into equity, because it's convertible debt. We don't know exactly Bitcoin's price trajectory over the next 5 years, down to the T. So you need to be able to weather drawdowns and weather bear markets over any extended period of time. Therefore, having no actual term to your debt obligations de-risks the chance that Bitcoin trades down and you have to pay back these leverage or these debt obligations at a loss. That's what the preferred equities do. The only bet you're making with a preferred equity is that the long-term growth rate of Bitcoin outpaces the cost of capital which you pay on the preferred equities into the future.
It's so interesting. And I think when I started Bitcoin podcasting, the question was, can strategy go to have 1% of the Bitcoin supply, so 210,000 Bitcoin? I remember those times. I think they were back then at 150 or something like that. And it was so interesting because we discussed if they can do it and all of those things. And now it seems kind of as a silly question just a couple of years later, and we are sitting at 738,000 or whatever the exact number is, more than 3 times as much as the one times. I think we have now 3.5% of the total supply that will ever be issued in Bitcoin. Maybe a stupid question, but is there a limit? Is there like a top where they can over 5%, over 10%? You don't think they can ever get more Bitcoin than that?
Yeah, ultimately it's a function of demand in the market and Bitcoin price, right? So at the current moment, I think we'll talk a little bit about why STRC really unlocks a new market. Prior to STRC, which is their stable preferred equity, it's effectively a debt instrument, even though it's an equity instrument. It's a fixed income instrument, right? They had their common equity, which if there was enough demand in their common equity, which is reflected by the common equity trading at a premium to their Bitcoin holdings, they were able to sell it into the market and capture the difference between the inflated equity price and the price of Bitcoin. They're selling equity at 1.5x MNAV and buying Bitcoin at 1x MNAV. That's an instant value capture. So they were limited by the demand for their equity, right? They could only buy as much Bitcoin as people were willing to buy the stock at a premium to the Bitcoin. Okay, so that's a demand question. And in bear markets, there is a lack of demand of Bitcoin. And in that scenario, in that case, it's very difficult for them to purchase Bitcoin. What do they do with STRC? They created a new product, which kind of changes the demand function. Where prior the demand was leverage Bitcoin, that's MSTR. Is there demand for leverage Bitcoin? That tends to happen in bull markets in frothy periods of time. STRC, they're bringing a product to market that is there demand for high yield with low volatility paid out on a monthly basis, over collateralized by an asset like Bitcoin? We're seeing on a daily basis now with STRC trading over $100, $200 million of daily volume, that there in fact is demand in the market for this type of product. And they're changing the demand profile, right? Whereas before the profile was leverage and Bitcoin exposure, now the demand's yield.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are 2 main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.